G'day folks, welcome back to another update for natural gas and the ETFs. Now we're hitting new highs.
New highs.
So before you go any further, make sure you hit that like and subscribe button to support the channel and reference the +1 videos on the Patreon page, links in the description below, where we also look at bullish shares each week. Now in terms of the outlook, as of December 2025, natural gas prices remain elevated around US $5.10 to $5.20 due to strong winter demand and heavy LNG export flows. Global demand growth has softened in 2025, but LNG supply has expanded, adding some medium-term stability. Geopolitical pressures, including halted Russian pipeline transit through Ukraine, Middle East instability, and infrastructure attacks, continue to inject volatility into the market. While rising LNG capacity improves longer-term supply security, winter conditions and conflict-driven risks keep the near-term outlook tight and highly reactive. So first, looking at the weekly chart for natural gas, you can see here the price is well above the moving average band, although we'll get a slight weakening this week so far, with the CCI just pulling down slightly. But again, it's still bullish, no sign of any divergence as well. On the daily chart, you can see they're still bullish on the price, but notice the CCI is giving us a bearish divergence. And you measure that from that high to that high, which is lower highs on the CCI versus higher highs on the price, and that's hitting this resistance up here at 53.20. So again, if this starts pulling back, we did draw a target range for it previously at that point. We're going to adjust that because that's risen since our last video, and we take it back to that low, and that means we have to raise that 23-38% target range to that level there. That's assuming the price continues to drop from there, in line with this CCI dropping as well. That's our minimum retrace we can expect, and more than 90% of the time it hits that range. On the hourly, what we're looking for here is, first of all, that the trend, and they're both broken below the moving averages. And the next thing we look for is any divergence. Now we did have a little bearish divergence here that worked and clicked that 23-38% range, but since then there's no further divergence to be concerned about. So what we do look at now is the back test. So going long, let's go back to the daily for a moment to show you where you typically start going long. So you would have started going long from about the 3rd of September. That's where the price is consistently above the moving average range. It broke into it a couple of times, but it didn't actually break with the moving average band breaking down. So it still continued in an uptrend. The CCI, although did break slightly down, but notice that we pay attention mainly to the price action here. So bullish momentum since around about the 3rd of September, as I said. We're going back to the back test. We're starting here from about September 10. And basically what you do is you follow the moving averages on the price and the CCI. When they're both in an upswing, you go long, and you close it out when they both start, when you're in profit, and you close it out when moving averages start to turn down. Going long again, we're in an upswing. Notice here you're getting a bearish divergence while the price is rising. Now it's giving you an early warning to possibly take your money off the table and get out with a profit. Again, even though the CCI here was giving you a bullish divergence, the price was still dropping, and you would have gone long at that point there when the price broke through that moving average range. Again, notice another bearish divergence, and so on. So where we are at the moment, I'd like to zoom out slightly so we can see the moving averages more clearly. You can see they're going long, possibly holding it during that consolidation, going long, long, possibly closing it out and hit that little bearish divergence, as we said, going long, possibly closing it out or holding it. And that's where you can average down and holding it and possibly getting close to closing it out with that moving average band about to break to the downside. So here for BOAL on the weekly, it's got a fresh breakout to the upside on the moving averages. Notice the CCI is still in that moving average range, so cautiously bullish based on the weekly. On the daily, that's already broken above the moving average band, and so is the CCI. Had a bit of a dip there, but nothing too dramatic. And you would have been going long on the hourly, so let's keep that in mind. According to the 29th of September, at that point there, you would have started going long. Notice going long and not short because the moving average band of the CCI was also rising, giving you a bullish momentum primarily. On the hourly, that's still above the moving average band, but notice the CCI has broken into it there. So a bit of a weakening at the moment. There's no divergence to be concerned about. Last divergence we had was this bearish divergence back here where it broke down into our minimum range. Now, according to the daily, you would have been going long in the back test from the 29th or 30th September. Again, going long on that moving average band with the CCI and the price, closing it out when it breaks below. Avoid going short, going long again there. Avoid going short or close out at the profit, and so on. Where we are today, you'd probably be closing it out when you see that, if you're going to be conservative, when you see that CCI break into the moving average band, it closes it near the top. Or if you want to be a bit more adventurous, wait until the moving average band starts to turn down like it did back here, for example. So for KOLD on the weekly, we've got a bearish momentum, price and CCI below the moving averages and still dropping. No divergence there currently. On the daily, that's also bearish, both price and CCI dropping. Again, no divergence. The last divergence we had was this bearish divergence versus a double top on the price, and that broke down, hit our target. And on the hourly, again, bearish momentum, although notice the CCI is broken into the moving average range, but still predominantly bearish momentum. And any divergence, none that I can see at the moment. So on the back test, this time we're looking at the short positions from that point, according to the daily. You would have been going short during that downtrend on the moving averages with the CCI as well, closing it out with a profit. Otherwise, if you've still got in the red, you can hold it on and average down when it starts breaking down, so long as the daily is in a downtrend. Going short again, let it hold it there, went sideways slightly, hold it, and then close it out when it starts bending up. And where we are at the moment, you'd be either holding it if you want to be adventurous, or closing it out when the CCI touches that moving average band near the bottom there. So for UNG on the weekly, that's bullish on the price and bullish also on the CCI. And that's actually probably starting as a result of this long-term bullish divergence. You can see there are higher lows on the CCI versus lower lows on the price. And that's been happening now for a couple of years. So again, a long play, but finally bullish on the weekly. On the daily, that's already bullish. You can see there it dipped into the moving average range, but still bullish since the start of November. The CCI likewise still above the moving average range, and there's no divergence currently there. And looking at the hourly, we see if there's any divergence in play. There's none. And we now go to the back test. So with the back test going long, you would have been going long from that point there. And again, taking long trades when the moving averages are in an upswing, closing it out when they're in a profit, and the moving average band starts to turn down. Going long again, you possibly hold it there, and then close it out when they start to turn down. And where we are at the moment, both CCI and price are in an upswing and possibly holding it out, or again, if you want to be very conservative, closing it out whenever these moving average CCI touches the moving average band, and if you're in profit, take your money. So if you'd like to get some insights into some share trading ideas, why not subscribe to the Patreon page? These are some of the trades we closed so far this month, and they've reaped 3.27% in a few days of trade. And last month, just for reference, we had a few trades as well. Again, these are all closed trades. None of these are open. And last month, we returned 5.66% in a month of trade, which is not too bad a result. If you annualize that, that's a pretty good result.
This looks positive.
So consider subscribing to the Patreon page where we look at those bullish shares, and also the +1 videos where we do a deeper dive into our trading strategies. Hit that like and subscribe button. Thanks for watching, and see you in our future video.